Vijay, thanks so much for joining us this afternoon. Well, one would assume that this comes as little surprise in a context where we've seen the global financial crisis hit and consumers under significant pressure. Let's go through some of the pressure points being exerted on your company at the moment.
The truth is, Alicia, that our top line growth was pretty impressive at 45%. The pressures really came from forex volatility, which is probably the biggest pressure we had, in the sense that the currencies fluctuated so rapidly that we were unable to hedge against some of the currency risk, and that cost us a lot of money last year. In addition, there were certain working capital excesses that emerged because we were fairly aggressive in our prospects in 2008. Those didn't materialize in terms of top line growth as we would have liked. So we ended up paying sort of higher funding costs when we wouldn't otherwise have had to have paid those. So those were really the two big pressures, I think, in the last financial year, which hopefully will be past us this year.
Well, of course, you highlight currency risk, and that's something that's really inescapable. But if we look at the way forward, are you putting any risk mitigating strategies in place in that regard to help cushion possibly some of the blow this year?
Well, we've obviously sort of been hedging a lot more this year, but we tend to put in the risk when we can sort of foresee a sort of a downturn. But the truth is that we're not putting in too much hedging simply because we don't foresee the currencies fluctuating anywhere near as rapidly. So we won't hedge 100%, but we'll probably take maybe a 30% hedge on it.
With that being the case, we've heard that the company is betting on growth. So where exactly are you investing your energies and your capital to foster growth this year?
Well, if you look at the whole region, including Kenya, Tanzania, Uganda, the growth rates, in spite of everything, have been fairly impressive. They're still growing at 5% and over. Right? Kenya is probably growing slightly less, but the other economies in the region are growing fairly rapidly. So with a sort of a cautious product expansion strategy, a regional expansion strategy, growth is inevitable so long as we're able to manage our business effectively.
How are you looking at financing this expansion moving forward? Are you sitting with a comfortable enough balance sheet to do this, or will you be going to market to actually raise finance moving forward?
I think for this year, most of the growth will be organic, in which case we'll be financing a lot of it internally or through internally generated funds. In terms of if we saw, for example, a good acquisition somewhere in the region, then obviously we would look at financing that externally. But as at this point in time, that's not in our immediate plans, in the sense that we haven't identified an acquisition target yet.
From the sounds of things, you're taking a bet on growth. You've expanded inventories, bank borrowings have increased, distribution costs have also gone higher. Some saying this looks lumpy as you play this expansion game. So how soon should the market expect to see fruits of this expansion drive?
I think the fruits of the expansion drive are already taking effect, to be honest with you. I think the balance sheet that we're looking at is 30th of September, and I think we're already seeing the benefits of some of the hard work that we've done. And we hope that that will accelerate in the sort of last 6 months of this year.
Well, you've proposed a dividend payout of 0.67 shillings per share. It's unchanged from a year before, but a divvy payout nevertheless, and many would be excited. Some saying, though, that upping the divvy should be a possibility moving forward, where you're sitting on a PE of 3 and the stock is looking like a conservative and cheap play. Should we be anticipating an upping of that dividend moving forward?
Well, I'm not sure in the short run, in the sense that we are putting a lot of investments back into the company, and for that reason we're maintaining a fairly conservative dividend.
On that note, let's leave it there.